Hello, welcome back. There is a company that is really trending right now. It's being discussed a lot. A very small company called Vinco Ventures. And you will see if you take a look at what is going on Reddit and all the other social platforms pretty much, that this one is actually pretty hot right now. And this is why I'm making a video. It's a 2018 IPO. It's a company that develops and commercializes end-to-end consumer products in North America. It offers kitchenware, small appliances, toys, pet care, and other products here, as you'll see, to governmental agencies, hospitals, and distributors. Interesting company here, but we do want to see what's the fuss about this company. Now, if we take a look at the stock news, you will kind of see what is happening here. Here's what to watch for Vinco Ventures. Stock after trade resumption and news send the stock soaring. And cheap penny stocks to buy right now. This is a penny stock, pretty much is near $1, and the stock soars higher as trading resumes. And you will see here, we can always take a little bit of a look at the news and see what happened. Vinco Ventures negated its long-term downtrend, which we will examine a little bit later, but hasn't yet confirmed a new uptrend is in the cards. The stock is in need of longer-term sideways consolidation above the $1 level, as you'll see here. Now, what happened here is what we want to see. Benzig asked his followers on Twitter what stock they are zeroed in on this week, and a lot of the answers were about Vinco Ventures, it looks like, which resumed trading on August 16, pretty much, after being halted for nearly 2 weeks after additional information was requested from the company by the Nasdaq stock market here. And when the halt lifted at 12:30 p.m., the stock began to soar, rallying more than 50% of the open, as you can understand. Probably, investors, or I should say traders for the most part, were thinking that nothing really went wrong here, and this is why we're looking at a higher stock price. People piled in on the stock. So, prior to the halt, Vinco Ventures announced July 25 the termination of CEO Lisa King here, and some of the other executives as well. The day before the hold was lifted, Vinco Ventures announced a licensing agreement with AI Pros. Vinco Ventures plans to use AI Pros technology to develop a TikTok competitor targeting the US and Canadian markets, which is very interesting here, like super interesting. And as you'll see here, a massive increase in trading volume hit Vinco Ventures during the 4 trading days following the hold being lifted, which caused the stock to skyrocket a total of 158% between these dates over here. Now, as you can understand, this company is interesting, definitely very interesting, especially when you are hearing about a potential TikTok competitor. Your eyes become slot machines potentially. But we do want to examine what they have been doing and what they are doing right now. Is it an interesting buy? Is the thing? Now, you could always be thinking that, okay, this may be worth a try, and maybe you can hold for the long term and kind of bet on it potentially becoming the next TikTok. Who knows? But it's a long shot to take, really. And the thing is, if you are overpaying a lot, then it may not be a great idea. And it does sound that it's cheap. The fact that it's down 88%, it used to be almost $9, approaching $10 here at some point, and then it went down tremendously, like 90%. So why did this happen? And is this actually declaring to us that the company has been super overvalued to begin with? Is it expensive still, or is it cheaper right now? And what about the 10x multibagger effect? Is this going to be a multibagger? So let's talk a little bit about this. Now, you will see that the company is not making money, and the P ratio, the price to free cash flow, are very negative here. And you will notice that taking a look at the net income, that they had a pretty horrible year, pretty much in 2021. And outstanding shares, they have been going upwards because, as people were piling in on the stock, the company actually thought that it's a good idea to take some profit and issue extra shares and make some money off this huge jump over here, which makes a ton of sense. Like you can see the whole thing here, the 3-year chart. And this makes a ton of sense. I mean, if I were an executive in the company, I would probably do the same, because I would want to get some money out of the movement, the price movement of the stock. It makes a ton of sense. But in terms of an investor, this is a horrible thing, as you can understand, because the flow, the outstanding shares has been jumping tremendously, and it's pretty terrible here. You have been diluted massively as an investor. Basically, your shares have become, practically speaking, almost worthless here. So this is really bad for a long-term investor, and this is why the total equity has been growing, of course, because of these extra shares. But other than that, everything else in the company doesn't look nice, and even the revenue is going down. which are very bad factors to account for. Especially the revenue growth is pretty bad to see that it's actually going negative. You don't want to see that from a company that is not making money, of course. Now remember that we are in an environment where every company pretty much can have some slump, some days, some quarters potentially that it's not going to be doing well because of what is happening in the markets. And so this is not a definitive factor, the fact that their revenue is down, for me not to be buying this company. Now the debt that they have compared to equity is not high, but remember they got a lot of equity because actually they were making money selling shares. So that's how they have so much. But again, in terms of what they are doing, of their returns here, like you will see high returns on equity from when the company did make a little bit of money here, but overall things are not really looking great in terms of the financials. And you will kind of see it over here in the income statement, for instance, that the company has been, generally speaking, sort of like growing the revenue, although last year has been a little bit bad. But again, this can happen. It doesn't really worry me too much, frankly. 1 year or a few quarters is not like the definitive thing. What is a little bit more actually bad here, worse I should say, is the fact that the net income was actually very negative over here in 2021, which wasn't a great year for the company. Again, this can happen, but this kind of losses can accumulate rather quickly here. And you will see that the current total equity of the company is not very high as well, sitting at 133 million. So I'm wondering whether the company will keep on issuing shares, although right now they should probably stop that because the price of the stock has plummeted. And one of the factors why the price of the stock has plummeted is definitely the extra shares that have been printed, no doubt about that. So the company, take a look at this one, take a look at the amount of additional paid-in capital that was added here because of the company issuing shares. So this is absolutely crazy. And in terms of the cash flow statement, you will notice here that we were very in the negative over here, and after all the adjustments, we are still seeing at negative free cash flow. Not horribly negative, but still pretty negative, as you'll see. In terms of insider trades, you will kind of see here that there have been some sales pretty much lately from the director over here, Philip Anthony over here, and he has sold a lot. That is interesting to see, but the price that he has sold for was $5 over here, although he has sold at $1 as well, 1.44 here. And he made a ton of sales over here, which makes a ton of sense because the company's stock price was soaring, so you can understand that. So a lot of selling going on at these prices over here. Actually, this is a buy from the director as an award. It's part of the compensation, pretty much. But yeah, overall there has been some selling, and quite significant so as well. So they have been selling quite a lot, even at $1. So yeah, this may be a little bit demoralizing for potential investors here. Interesting to see. In terms of senator trades, we didn't have anything for this one, as I was taking a look at earlier. Now, I will take a little bit of a look, of course, at what our stock evaluation tool will tell us. But remember that this company hasn't really been making money, so we have to go with some assumptions. So in terms of revenue growth, the company hasn't been growing much, and actually has been in the negative, as you'll see. The average is minus 7%. So let's assume that it will start growing a little bit and does 3, 5, and 7. Which could happen potentially. Again, remember, this is a company that could continue growing, especially if the thing that they are considering about the TikTok stuff would actually catch on. Now, this is very speculative, of course, but we will just take this into account. And so the net income margin that they have been making has also been pretty negative for the most part. So we're going to go with marginal profitability, as we usually do with these kinds of companies that are not really profitable here. Because if we don't have any profitability, the company is not really worth anything. So we need to assume that the company at some point will be reaching some profitability. Otherwise, it doesn't make any sense to invest. I mean, why would you invest in something that keeps losing money forever? It doesn't make sense. Or at least, let's say, the next 10 years. Like, why would you buy today if it keeps losing money for the next 10 years? It's a sink, it's a hole, pretty much. And a 13% annual return here. Of course, the margins that I typically use, 80, 90, and 100%. Let's hit calculate, and what are we getting out of this one? Yeah, as you can understand, this is it is a penny stock that's almost worth nothing. And even at its current price, it's very expensive for what it is. And you have to like seriously bet on this one to basically get a lottery ticket in order to buy this company over here. Now, you may be thinking that this is $1, so I mean, it cannot go lower. But think again, because even companies that are $1 right now, they can actually do something that's called a reverse split. So instead of actually issuing, let's say, 20 shares per 1 share, they can actually do the opposite, like issue one share per 20 shares. And so you will suddenly see this going up to $10 or $20, depending on the ratio that they choose. So don't think that because the stock price is low, it cannot go lower. It can definitely go much, much lower than what it is. And when you are nearing $1, you will eventually have to do some sort of a reverse split if you want to remain in the market, basically in the Nasdaq. Otherwise, you will be moved after a while to the OTC market. You will become an OTC traded company because you need to be at least $1 in order to remain in the big ones, in the big exchanges. So I hope you enjoyed this video. It kind of gave you some idea about this company. Let me know what you think, and please leave a like if you are new around here. Become a subscriber, and I'll see you in the next video, guys. Have an awesome day. Bye bye.